guys, it's Stock Curry, and we've got to talk about what earnings were released on Wednesday. We've got to talk about what the Fed just did and what Jerome Powell said. Hold on for that one. And then we've also got to talk about the Q2 GDP coming out on Thursday. So let's get into it! In yesterday's video, I said this. I think it's very, very likely we could see the NASDAQ up between 3 and 5% by the close on Wednesday. And sure enough, the NASDAQ jumped 4% on Wednesday. Now, part of that was due to the positive earnings that came out Tuesday night, and then part of that was also due to what the Fed did on Wednesday. So let's talk about what the Fed did first. The Federal Reserve raised interest rates by 0.75% on Wednesday. Now, this was in line with expectations, and since we did not get a 1% interest rate hike, the market went up, breathing a sigh of relief. I also want to point out that the Fed interest rate is now at the benchmark rate of 2.25 to 2.5%. The benchmark rate is the rate that the Fed sees as neutral, meaning they're not helping the economy and they're not hurting the economy. It's just a flat neutral rate which will provide normal growth. Now, that was all fine and dandy, that was expected, but what was unexpected is what Jerome Powell said. Holy smokes, put on your seatbelt because this is crazy! First of all, regarding future rate hikes, Jerome Powell said that their number one goal is to get inflation down to 2%. He said they still plan to go full strength on reducing their balance sheet in September and that the market has absorbed the reduced balance sheet impact so far. Regarding how much they might raise interest rates, he did say that while he does expect this to be the last 75 basis point rate hike, that a higher rate hike is still on the table for September, and they are going to have to look at the data to determine how much they might reduce interest rates in the future. Now, the one thing that he did say is that so far they've done a really good job of forecasting what they were actually going to do. But now that interest rates are at this benchmark neutral rate, they're going to stop forecasting the rate hikes so much. So all of the future rate hikes from the Fed are going to be a lot more uncertain and will probably have a lot bigger shocks to the market. Jerome Powell was also asked on multiple occasions about a slowdown in the economy and a possible recession. The one thing he said is that while we are seeing a slowdown in the economy, the jobless claims remain strong. He said the labor market is moving back into balance. He said that because we have a strong labor market, that even though it's slowing a little bit, labor supply has not been slowing. So overall, he does think they can get the job market back to neutral without causing a significant downturn in the economy. Now, specifically asked about GDP being negative in Q2 and whether or not that would mean that we were in a recession, this is where Jerome Powell said a lot of really weird things. The first thing he said is that in some cases, GDP has been negative, but the labor market has been strong, and in those cases, the economy has been just fine. So Jerome Powell said even if Q2 GDP is negative, because the labor market is strong, the economy should be just fine. We're going to get through this, no problem, no issues, and nothing to worry about. He was asked how much of a slowdown would be acceptable before they would stop raising interest rates, and his answer was essentially that because the job market is so strong, they don't really care about the job market right now. They feel like that's strong, we're good on that, so they're just going to keep raising interest rates until we get down to a 2% inflation. If that causes a slowdown in the economy, so be it. Jerome Powell said a slowdown in the economy is necessary and a good thing in order to get inflation down. Later, Jerome Powell was asked, well, if there is a slowdown in the economy, wouldn't that put us into a recession? And Jerome Powell's answer was, and I quote, "This time may be different." Really, Jerome Powell? I mean, everybody knows you don't say this time is different. That is the biggest lie on Wall Street, is that this time is different. History repeats itself. This time is never different. Man, I don't know if Jerome Powell is lying or if he's just clueless, but that was a really odd thing for him to say. Then Jerome Powell got even weirder with what he said. He was asked if the Q2 GDP print on Thursday was negative, would that mean that we are in a recession? And Jerome Powell's answer was, it doesn't seem like we're in a recession because the labor market is strong, so it makes you question the GDP number. He later clarifies and straight up says that if Q2 GDP is negative, that it might be wrong. What? Jerome Powell's telling us to ignore Q2 GDP if it's negative because it's wrong? I mean, what is this guy smoking? Does he honestly think that we're just going to ignore 2 quarters in a row of negative GDP growth? Come on, man. Nobody is going to believe that 2 quarters of negative GDP is just wrong and that we should ignore it. I mean, come on. I get the job market is strong. We get that. But we also know that once a recession starts, layoffs balloon, layoffs skyrocket, and that's what makes paper recessions turn into real recessions. This exact same thing happened in 2008. 100% exactly the same. I'm talking word for word. Does nobody read history books around here? Does nobody look at the past? I think the markets are going to go down on Thursday. The weird things Jerome Powell said, it was like somebody in complete denial of the reality. I don't think it's going to be good at all. And let me tell you this also. I don't think Apple and Amazon earnings are going to be good either. Let's get into the earnings and I'll explain why. First of all, Meta, which is Facebook, they reported they missed on earnings, missed on revenue, and forecast a bad Q2. The stock was down 5% after hours, and rightfully so. Meta did bring the stock market down pretty significantly initially, but then a few other companies reported, and the market overall came up a little bit, but so far it's not looking good for earnings. Even more concerning, Mark Zuckerberg said that an economic downturn is here. So Meta's going to have to do a lot more with a lot less. Meta just joins a long list of growing companies who are warning that we are in an economic downturn and things are going to get a lot worse. Now, on a positive note, Ford beat earnings and beat revenue and then reiterated their forward guidance. Ford stock was up over 6% after hours, as well as it should be. Ford had amazing earnings. Best Buy, on the other hand, not so much. Best Buy just cut their forward guidance, saying that they are having a lot of pressure from inflation. Best Buy cut its forecast for both the second quarter and the year as a whole, and they said same-store sales are going to decline by about 11%. And this is why I think we're going to get bad earnings from Apple and Amazon. You have to keep in mind that we've already had forecast warnings from Walmart, Target, now Best Buy. Pretty much every single retailer is giving profit warnings because the fact is people are spending all of their money on food and gas and they don't have money left over to go buy things that they don't really need, such as cell phones and laptops. And what does Apple sell? Cell phones and laptops. I think especially this profit warning from Best Buy is a huge red flag that Apple is about to report a terrible quarter. I also think Amazon is going to report another bad quarter because the Q1 for Amazon was not good. I looked at all the Prime Day sales thing they did and I was not impressed. I didn't even shop Prime Day, and a lot of news articles came out saying that people should skip it. I don't think Amazon is going to report a good Q2 either. I think both of those companies are going to have earnings misses, and no matter what happens to the market during the day on Thursday, I think both those stocks are going to go down after hours on Thursday, and I think that's going to bring the entire stock market down on Friday. Now, despite the slowdown in the economy and all the negative news we've had from a lot of the earnings, we did get some good news today coming out of the Senate. The Senate announced a deal on a reconciliation bill with the tax, climate, and energy provisions. This bill is going to increase corporate taxes, raising an additional $700 billion, and it's also going to invest $400 billion into alternative energy and climate-related programs. So overall, this bill will reduce the federal deficit by $300 billion, and it also provides a significant boost to clean energy stocks, which is why we saw quite a few clean energy stocks rise after the market close on Wednesday. Now, that's everything that happened on Wednesday. Let's talk about what's going to happen on Thursday. Q2 GDP is being reported Thursday at 8:30 a.m. Eastern Time, which is 1 hour before the market opens. Economists expect that the economy grew just slightly in the second quarter, although overall, the entire economic range runs from negative 1.5% to positive 0.8%. So we'll have to see where in that range we actually fall. Now, I will let you know that the Atlanta Fed's GDP Now tracker actually estimates that Q2 GDP is negative 1.2%. And keep in mind that in Q1, the Atlanta Fed's GDP Now tracker was actually predicting a slight increase in GDP for Q1, and in reality, we had a negative 1.6% Q1 GDP. So now, if the Atlanta Fed is predicting a negative GDP for Q2, what is the actual Q2 GDP going to come in at? I don't know. Nobody knows. We're going to find out Thursday at 8:30 a.m. Eastern Time. I will tell you that I personally believe it's going to be negative. Between the weird statements coming out of the White House, the weird things Jerome Powell said today, I really think it's going to be negative. Now, we'll have to see what happens. If it's negative, then despite what the White House says, despite what Jerome Powell says, despite all the BS trying to tell you not to worry, the stock market is not going to like that. And I've got a feeling the stock market's going to crash on Thursday if we do in fact get that negative GDP print. And oh my gosh, if the stock market crashes on Thursday due to a negative GDP and Apple and Amazon report bad earnings Thursday after the close, watch out. Because all of the gains we got on Wednesday are going to get wiped out, and we could finish the week in the red by 3 or 4%. So don't think that Wednesday's big run-up was safety, not at all. It all comes down to the Q2 GDP for Thursday, and it all comes down to Apple and Amazon earnings for Friday. So stay on your toes. We've got a lot more wild, extreme, and insane market volatility coming up. Oh my gosh, we need to get a WWE announcer in here to keep up with this market because it is insane. We are about to get the smackdown. So hold on. Keep watching these videos, and by golly, if you're not subscribed yet, go ahead and subscribe. Hit the bell icon, click all, so that you can get notified when I release my next video. And if you could hit the like button, it would really help out the channel. Finally, guys, I want to remind you that we've got about 200 signups left for the VIP Discord. If you want to know everything I'm buying and selling, we made a 111% profit off my QQQ calls today. We could have made a whole lot more if I'd hold them, but I wanted to lock in profits because if there's one thing I've learned in this super volatile market, you gotta lock in profits. If you want to make potentially a 111% profit in your portfolio, then come join the VIP Discord where we are profiting day and night. You're going to get all my trade alerts before they are officially posted on Twitter, as well as all of my reasonings why I'm buying and selling. So if you want to lock in the price of $25 a month for life before those prices go up, then come join us at stockcurry.vip/getvip. That's stockcurry.vip/getvip. All right, I hope you have a lot of success trading, and I will see you tomorrow.